Emerging markets have not had an easy ride. The softening of Chinese export demand, record capital outflows, weakening currencies, as well as drops in commodity prices have made for a pretty tough environment. Whereas India, arguably, is one of the markets that has been weathering these downturns far better than others. And in recognition of the Reserve Bank of India's contribution to this achievement, the banker has awarded the governor, Raghuram Rajan, the title of Global and Asia-Pacific Central Bank Governor of the Year. And today in Mumbai, I'm joined by the governor himself to discuss about his work last year. Thank you very much for joining us. I think one of the biggest achievements, especially since the beginning of your mandate, was the stability of the rupee. So when you joined in 2013, the rupee was in free fall. Last year, the EM currencies had a really tough ride, but the rupee arguably was one of the more stable currencies out there. How did the RBI go about, first of all, halting the free fall and in minimizing the depreciation last year of the rupee?
Well, I think one of the interesting aspects to a currency is it sort of is a thermometer on the state of the country, which also then tells you that really trying to intervene directly in the currency when in fact a lot of concern is about policies is a very expensive task. So rather than focus on the currency, what we focused on was getting the fundamentals in place. Of course, the government had been doing some work already on it in terms of trying to fix the fiscal deficit and also trying to reduce the current account deficit. Our job was to convince investors that we would do a reasonable job on inflation. And we moved immediately to targeting consumer price inflation, not wholesale price inflation, which gave a misleading sense of the size of inflation in the economy, and then moved to an inflation targeting framework which we signed with the government, as well as in the near future monetary policy committee, which will be independent and take this forward. So all that gave investors a sense of confidence that inflation would not take away the gains from investing in the currency. There were schemes to bring in money also, just to show that we could borrow if we wanted to. And a series of reforms on the financial sector side, including a number of new banks, measures of financial inclusion, including when the government changed, the new government came with a massive program to give many people bank accounts, many people who were excluded. So a whole bunch of things on that side. Of course, political stability also happened.
I think inflation is a really good point, and I think you also reiterated it this week at the monetary policy announcement, where repo rates stayed at 6.75%. And you said that you were more comfortable about thinking of maybe moving them once you see the newest inflation data. What is your expectation? Are you a bit more pessimistic? Is that why maybe the RBI is being a bit more cautious about moving the rates as of now?
No, I mean, like many other central banks, we are data dependent at this point. We certainly look for information coming from the inflation outcomes. We're also waiting for the details of the budget, how the government is going to implement the pay commission recommendations for for government salaries. So all those things will factor into our decision. At this point, I think we are comfortable where we are, given our projections of inflation, but incoming data will give us a sense of what we need to do next.
And as you mentioned, another big push of reform is trying to also try to bring more foreign investors into the financial markets in India. There's a gradual liberalization of financial markets being pushed by the central bank. What are the intended effects of these reforms? And would you say that, of course, India, the capital account is still not fully convertible? Is it still very inconceivable, maybe, of moving towards a fully convertible capital account?
Well, on almost any dimension one thinks about, the capital account is convertible in the sense that anybody who wants to take out money from India to make a large investment abroad can do it. Where we have constraints is on households taking out money freely. But even there, a household of four can take out $1 million a year, which is far more than in other countries, and $1 million without questions being asked. So, in that sense, we're a fairly open capital account already. There are some restrictions, primarily on debt inflows into both corporations' bank debt as well as portfolio debt. And there, I think, so long as the world is a dangerous place, we have to be steady but somewhat careful in the pace of liberalization. So we have increased the ability of Indian corporations to borrow abroad. We've also increased flows into portfolio flows into debt markets, and we've chalked out a time path of liberalization there. What we did yesterday, yesterday was also announced a number of measures to bring in risk capital into startups and allowing for a variety of contracts and back and forth flows of capital flows. So this is also part of the whole process.
And I think the banking sector reforms are also a big part of the change in financial markets in the country. As you mentioned, you gave 23 new banking licenses last year. And I think that is also changing the makeup of the banking sector in India. There are essentially new types of banks being introduced, like payments banks and small finance banks. What is the RBI trying to achieve with these new licenses?
Well, to some extent, it's bringing fresh thinking into the banking system. We've had two new universal banks, which are one which historically has been focused on infrastructure, the other focused on microfinance. And we presume some of their DNA will reflect in the new businesses they do, which will be very interesting. We also have now 10 new payment banks and 11 small finance banks. The payment banks are intended to reach every part of the country and give people cash in, cash out services wherever they are, as well as bring in the whole mobile to mobile payment ecosystem into existence. Earlier, we were trying to get the banks to cooperate with the mobile companies, and it simply wasn't happening. The moment we allowed mobile companies in, suddenly a whole set of alliances formed within banks and mobile companies. So this has been a positive development, and I think very soon we'll see the first payment bank start up. The idea is it should be possible for somebody to take out money from any kiosk in the country and put their money into an account or send a remittance from anywhere to anywhere, including remote villages in India, where you may have a cell phone kiosk, but you don't have a bank with a branch within 10 miles. The second entity, the small finance bank, is aimed at lending. The payment bank can't lend. The small finance bank can lend, and the idea is it should lend to small entities. So it should have an ecosystem, a culture which is about lending to the small guy. And our sense is that that will also make a big difference. These are largely microfinance-oriented companies that have experience lending to the small guy. Now they'll get easier access to deposits and be able to lend.
And I guess on the other end of the banking sector spectrum, when we look at the public sector banks, of course, there's been a lot of analysis about them. Non-performing assets issue is still quite large. And many analysts argue that on their own 2 feet, some of the public sector banks will not be able to meet the 2018 deadline for Basel III capital requirements. In that context, RBI is giving capital infusions to the public sector banks on a regular basis. When we look at a longer term perspective, what do you think is the solution? Consolidation is something people talk about. It is still very politically sensitive. What are your views on this?
Well, first, we don't infuse capital. It's the government which has been infusing capital, and that has regular basis is probably a little too strong. For some of the weaker banks, the government has been infusing more capital. I think we are embarked on a process of governance reforms in the banks, strengthen the management, strengthen the powers of the boards. The next step is to clean up the balance sheet from legacy assets. And the third step, which is part of the process, is recapitalize the banks that need recapitalization. But of course, the idea is to make them sort of de-link them from government infusions. Now, there are some small public sector banks, as they are cleaned up and the governance process is strengthened, there certainly will be a case for them merging with others that they have synergies with. And I think this process is certainly being explored, contemplated by the government, and let's see how it proceeds. I think there would be some value gains if the right kinds of mergers take place, and I'm hopeful. There is also some discussion about privatizing at least one of the public sector banks, IDBI Bank, and again, that's a discussion that's ongoing, and the nature of the disinvestment process in that bank, we have to wait and see what happens. But the government is engaged in a variety of experimentation with the public sector banks, with the idea of putting them on a much stronger footing and able to compete.
Well, I think arguably this is one of the most exciting times for India's banking sector, and RBI is at the center of it. So congratulations once again on your award, and thank you so much for joining us.
Thank you very much for giving me the award. I'm obviously very honored. And yes, it is an exciting time, and it's fun.
Thank you.